Most systems don't announce themselves. Each day unfolds through a series of familiar transactions. A morning coffee paid for with a tap. A monthly utility bill settled with a click. Groceries are scanned, transit passes are swiped, and subscriptions are renewed, often without a second thought. These are the small, seemingly insignificant moments that form the financial rhythm of modern life. They appear independent, isolated events, simple exchanges of value for goods and services. Yet, beneath this surface of routine, a silent and continuous process is at work. Each payment, no matter how small, leaves a digital trace. Every bill paid on time or a day late contributes to a vast and ever-growing portrait. This is not merely a record of what we buy, but when, where, and how. The data points accumulate, the frequency of our purchases, the merchants we favor, the regularity of our income deposits, and the timing of our debt repayments. This cascade of information flows from countless terminals, apps, and online portals, converging into immense centralized databases far from public view. What begins as a simple act of commerce becomes a permanent entry in a ledger we rarely get to see. This digital chronicle is comprehensive, dispassionate, and persistent. From this raw data, complex systems begin their work. Algorithms, designed for pattern recognition, sift through the endless streams of transactions. They're not looking for individual stories, but for statistical signals. They seek correlations, probabilities, and deviations from established norms. Is a pattern of spending stable or erratic? Are debts being managed or are they accumulating? Does income consistently exceed outgoings? These automated systems are built to perform a task of immense scale, to assess risk. They translate the nuances of human behavior into the cold, hard language of numbers. A person ceases to be just a person. They become a profile, a collection of data points to be weighed and measured. This process culminates in a score, a single, distilled number that aims to represent an individual's financial reliability. This score is a powerful abstraction, a shorthand for trustworthiness that can be transmitted and understood instantly by countless institutions. It determines access. A high score can open doors to favorable loans, lower interest rates, and premium credit cards. It might influence the security deposit required for an apartment or even the premiums offered for an insurance policy. The system is designed for efficiency, creating a standardized language of risk that simplifies decisions for lenders, landlords, and service providers. A good score becomes a key, unlocking a smoother, more affordable path through life's major milestones. Conversely, a lower score can introduce friction into everyday existence. It may not close doors entirely, but it often makes them more expensive to walk through. Interest rates creep higher, credit limits are constrained, and loan applications may face greater scrutiny or outright rejection. These are not punishments in the traditional sense, but rather the system's automated response to a perceived higher risk. A late payment, a period of unemployment, or a high ratio of debt to income can trigger a downward adjustment in the score. The penalties are subtle and systemic. They manifest as less favorable terms, missed opportunities, and a persistent financial headwind that can make upward mobility more challenging. The system operates on probabilities, and for those who fall on the wrong side of the statistical line, the consequences are tangible. Over time, this constant, low-level feedback begins to shape behavior. The knowledge that one is being measured creates a powerful incentive for compliance. Individuals become conditioned to think about how their actions might be interpreted by the scoring systems. A large, unusual purchase might be postponed. A new line of credit might be avoided to keep utilization rates low. Bills are paid with a newfound urgency, not just to avoid late fees, but to maintain the health of one's financial profile. This psychological conditioning fosters a culture of self-monitoring. People become the passive administrators of their own surveillance, carefully curating their financial activity to present the most favorable picture possible. The system encourages a specific type of behavior, predictable, consistent, and risk-averse. This subtle shaping of daily choices compounds over years, nudging individual life paths onto different tracks. The person with a high score from a young age finds it easier to secure a mortgage for a first home, building equity while their peers may still be renting. They might get a car loan at a better rate, freeing up income for investment or savings. They are offered the best credit card rewards which subsidize travel and other purchases. These small advantages, repeated over decades, create a significant divergence in outcomes. The system, designed to assess risk, inadvertently becomes a mechanism for allocating opportunity. It reinforces existing advantages and can make it difficult for those who stumble to regain their footing. The long-term consequences extend beyond the purely financial. They can influence where a person can live and the type of work they can secure, as some employers use credit checks in hiring. It can even influence the social circles they are part of. Two people with similar incomes and aspirations can find themselves on vastly different life trajectories, their paths diverging based on a score assigned to them by a machine. What begins as a simple record of payments evolves into a quiet but powerful force that helps structure society, sorting individuals into tiers of access and opportunity. It is a slow, almost invisible process of stratification, guided not by human intention but by the logic of the algorithm. And so the cycle continues. Each tap, swipe, and click feeds the system, refining the profiles and adjusting the scores that, in turn, influence the next set of choices. It is a closed loop, a self-perpetuating mechanism that operates silently in the background of our lives. It is not a conspiracy, nor is it the work of any single malevolent actor. It is simply a system designed for efficiency and optimization, whose logic has permeated the very fabric of daily existence. It observes, it calculates, and it sorts. And in doing so, it quietly, methodically shapes the course of a human life, leaving us to wonder not at its power, but at its quiet, unassuming presence in everything we do. The most powerful systems are the ones you never notice. This is the quiet machine. If you want to understand the systems that shape everyday life, subscribe for more videos like this.